Of course, the primary reason why Alibaba stock is jumping in recent days is because of potential fiscal stimulus in China that could boost consumer spending and thereby lift revenue and profitability for Alibaba stock investors. But that's still very early in terms of the announcement and the impacts it can have on the company. I wanted to dive a little deeper inside the company's operations to determine what's going on most recently with Alibaba stock. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So Alibaba's management in their most recent conference call in the middle of November said that purchase frequency continues to increase and GMV growth on the platform is benefiting as a result of that. People are spending money more often on Alibaba's platforms. Also, monthly active buyers on Taobao and Tmall reached a new all-time high. So each customer is visiting the website more often and spending money more often, and they're getting new customers. So that's a great 1-2 punch for Alibaba stock investors. The company is getting the benefit of increased frequency and new buyers. And of course, just to remind everyone, I've had Alibaba stock rated as a buy for a couple of years now. In fact, I had Alibaba stock rated as one of my top 25 stocks to buy almost all year. I recently removed it off of my list about a month and a half ago. Remember when there was the initial news about a fiscal stimulus in China and Alibaba's stock price soared as a result of that? Well, during that peak, I told investors it was a good time to take profits in Alibaba stock, sell some of your shares if you had benefited from that rise. But I reminded investors I still liked Alibaba stock even at those peak valuations, but I didn't like it as one of my top stocks. And now that the price has retraced back down to lower levels before that boom from the initial stimulus announcement, I've reiterated that I still like the stock as a buy. In fact, I updated it today, December 9th, reiterating that I still like the company's prospects and valuation. The buybacks have been absolutely massive if you've been following that. The company's retiring millions of shares of stock and thereby increasing the earnings per share because there are fewer shares outstanding. So that's just a reminder of my coverage of Alibaba stock over this year and before. So management saying that they've progressively enhanced operational efficiency and monetization capabilities and improved the performance of loss-making businesses. And they've done this, usually businesses do this when growth slows, when revenue growth is slowing. You have more time and energy on your hands and more resources, more human resources available to focus on efficiency and costs and those things, right? When you're really busy and your business is booming, everything is going right, and you're having a hard time keeping up with demand, you're not really focused on your costs, right? So you let some costs get out of control, you let some inefficiencies uh, persist because you're more focused on meeting customer demand. You want to make sure that you serve these customers effectively, and then you'll know, every business knows that there will be a slow period, that there will be a slowdown. And when there is a slowdown, that's when you devote your energy to improving efficiencies, finding areas where you've mismanaged because you've been so busy, finding areas where costs are higher than they can be, and looking at newer vendors to see if you can lower prices at certain categories, etc. Right? So that's what Alibaba's been doing prudently. Their business, their revenue growth has slowed down considerably in the last couple of years, and so they've took that opportunity to investigate these areas, and they're making improvements in these areas. So Alibaba believes that the growth of purchasers will continue and user growth and retention will bring more consumption upside in the future. That's great to hear. And they're optimistic about the government's macroeconomic stimulus policies and are confident in their positive long-term economic impact. Remember, this conference call that I'm going over here in this video was from about 3 or 4 weeks ago. So this doesn't include the most recent stimulus announcement from this morning, December 9th, that we're hearing in news around the world, and that's sending Alibaba's stock price higher by as much almost 10% as of this recording. Right before I started this recording, Alibaba's stock was up roughly 10%. So if they were optimistic about that previous stimulus announcement, today's stimulus announcement was even more magnified, more with more amplification, I should say. It's not going to be as disappointing as the first one, because the first one, investors were left a little disappointed, thinking that the Chinese government needed more stimulus than the government had announced several weeks ago. Today's announcement feels like investors are happy with the magnitude of the stimulus that was announced. The Chinese government saying that they're going to enact certain counter-cyclical policies that will help offset some of the slowdowns in certain sectors and take a more proactive approach at stimulating the economy, something they've been hesitant to do. But it looks like they're becoming more interested in doing that because of all of the headwinds facing the Chinese economy. And this is before President Trump even takes office. And remember, President-elect Trump is threatening to impose more tariffs on the Chinese economy, and that Chinese economy relies significantly on exports. And exports to the United States specifically, one of their largest trading partners. And so if there's increasing tariffs on Chinese products, that's going to make it more expensive for US consumers, and they're going to buy less if things are pricier. Also, it's going to put fear in the minds of businesses that are exporting their production or outsourcing their production to China. With the increasing cost, it's now making that equation not as beneficial to outsource your production, because it's not just the price. You're getting a price improvement by outsourcing your production to China, but you're taking yourself further away from your customers, and it's taking longer update times, upgrade cycles to improve your products, because it's going to take months to ship all those products back to the United States. And so now businesses are going to start to think, okay, the price difference is not going to be as large, and I'm also going to have to take this slower innovation cycle. It might just make more sense for me to bring back to onshore my production, and there's probably going to be incentives locally to bring back jobs, bring back business back to the United States. And that's not good news for China. And so now the government sees this as more urgent to stimulate the economy. Otherwise, it could really get into a tailspin of negative growth in the region. So those are the latest developments for Alibaba here. And it'll be interesting to see how the business responds to the stimulus once it's enacted and once we start to see increases in revenue and customer transactions. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.